Good morning, everybody. Welcome to the Flow Show. Good to see you all here this morning. Morning, Kay. How you doing, mate?
Good morning, Ryan. Good morning, everybody. Yeah, I'm doing fine, Getting ready.
Good. Yeah, all getting ready. Got another busy day today. Lots of stuff happening in Japan. Just a quick heads up. We might be a bit of a quicker Flow Show this morning. Unfortunately, Dale's off, so he won't be on F.A.C.E. So don't want to be doing a load of analysis on this show, then have to repeat it all 30 minutes later, 40 minutes later. So we're going to do a little bit less on the show, and you can come and join us on F.A.C.E. And get the super nuts of everything and what's happening with the CPI and everything on today. Anyway, let's crack on, shall we? Lots more news coming out of Japan. This is going to be it for the foreseeable future. Lots of sources, headlines, bank speak, and all the lights coming out. So let's start with a bit of data, though. PPI data coming in a little hotter on the month, but as expected on the year-on-year number there, 0.2 on the month, 0.6 on the year. That is higher both than last month. There's a business sentiment index as well that coming in for Q1, down 6.7% for large manufacturing firms. So not too good a number to start the first quarter, just the data so far. But we know manufacturing hasn't been in the best of moods there and elsewhere. We had the Finance Minister Suzuki coming out saying he sees positive moves in the economy, says he can't say deflation has completely ended. That's a scenario that has been running alongside what's going on with the Bank of Japan, whether the government officially calls the end of the deflation period, which is a pretty big move for Japan. Ueda was in Parliament answering questions, and I wouldn't say he's completely poured cold water on anything. He's kept people's feet on the ground. He's put a bit of a dose of reality, perhaps, into expectations for the Bank of Japan. He started off pretty much repeating what we've heard from their prior reports, saying Japan's economy is recovering moderately, although some weak data has been seen. Consumption is improving moderately on easing cost push pressures, and he hopes for higher wages. He says some firms appear to be delaying investment through capital expenditure plans, though they remain firm. He says more data will come out this week, so we'll look at those comprehensively in reaching an appropriate monetary policy decision. He says he's focusing on whether positive wage inflation cycle is kicking off, in judging whether sustained, stable achievement of our price target is coming into sight. Says he will think about policy changes if the inflation goal is in sight. So, little less hawkish than some of the others in saying that it's going to be a close run thing. He's keeping his options open and just keeping, as I say, the market's feet on the ground a bit by saying that they still yet to decide whether everything is in sight, as they say. He then said that actual steps and content of adjustment will depend on the situation, and that if inflation accelerates and warrants monetary tightening, it's possible to do so by raising rates without scaling back the BOJ's bond holdings. Says there's also various ways to push short-term rates into positive territory. Now, I think Gigi is our air balloon airdrop press source of late, because they keep coming out with story after story after story. They've said that many Japanese firms are offering big pay hikes in the Shunto talks, and says these companies not only include automakers but other manufacturers, but also restaurants and other service operators and retailers, so suggesting that the price hikes are widespread. They then sort of repeated one of their own headlines that they've already dropped previously, saying that the BOJ are seen ending negative rates if the wage data is strong. Then there was other sources coming out, which it's from Bloomberg, but it looks a lot of a rehash of what we've got from Gigi. They said that the Bank of Japan is thinking about a March hike, but the outcome is too close to call. Officials are said to be currently split on March or April. We knew that already from the last couple of speakers we heard. We'll judge if pay figures are enough for a March move. We knew all that. And may send a hike signal if they hold rates in March, which is what we've been telling you as well. So nothing really new from that. But it's floodgates at the moment. Kay, you either not dashing hopes, but a little bit of reality, perhaps.
Exactly. Keeping people's feet on the ground and not going to rush into anything conclusive before they take the decision. He's been holding his line, right? There's a lot of other stuff, a lot of other rumors, people in the know, people familiar with. There's only been really one actual BOJ member who said that he was thinking about March or April. All the others, they are still along Ueda's line somewhere. Yeah, it's just a confirmation that this week's tomorrow we kick off with those possible news about the wage hikes. Gigi starts to feel to me like being a bit of a speaker box for whether it be Kishida or some people on the edges of the whole program, if you want. Sending out a lot of things. Yeah, I mean, maybe they know. It is a good newspaper over there, of course, but it's only maybe they know, you know. It's still to be seen. What that tells me personally for the upcoming Bank of Japan is that we possibly will have indeed, as we've been saying, the preparation of. To me, at least April is a done thing, if not March, right? But also, I think what Ueda is telling us through the lines probably is that they are going to abandon YCC, come up with that new JGB buying program. That would already be kind of a step for them, and then they will probably raise the rates in April. That is now, to me, a very plausible scenario, that they will do some stuff in this meeting because they can afford it. There's no need to keep the YCC officially somewhere there, even if it's just a guide now. It's not even a fixed program anymore. They could also screw back on ETF buying officially, but they haven't bought any over the past year and a half. So they could take those little bit of steps. The market may find it positive for the yen then, but we will see first those wage negotiations, right?
Do you think they'll keep the YCC perhaps just initially after they hike, just so they've got that safety net in case things get a bit too volatile, or will they naturally do that anyway?
Oh, definitely. I think they'll keep it in the toolbox. They will keep it in their toolbox and take it out whenever needed. But if they raise, I mean, we're front running the events, right? I think if they raise the rates this month, March, that means that they are very confident. But the way that just told us, and then Suzuki on the side, I think Suzuki was a little bit of a playing, trying to do a bit of mind games and telling the Bank of Japan not to raise rates too early by not calling the end of deflation officially, because that would give them more food to raise rates, right? And since we know that they are still in close cooperation, the one is pushing the other one and pushing and pulling a little bit. So yeah, I think if they would raise rates this month, it would be quite a hawkish signal, and that's where I diverge a little bit with your opinion that it doesn't matter whether they hike in March or April. I think it would matter a lot if they hike this month. So after hearing Ueda talking, I still think that they are just going to prepare us. And they may do the other stuff, you know, putting YCC officially back into the toolbox and doing some stuff on the JGBs and on the ETFs.
Yeah, yeah. Thanks, mate. Right, let's crack on then. Over to the UK, we had jobs data out, which was a little bit on the, I wouldn't say softish side, but it's going the way that you would expect, or that the Bank of England wanted to go anyway, with wages coming down, still running very hot. Wages, including bonuses, came in at 5.6, down 2 pips, was expected only for 1 pip. Ex bonuses came down at 1 pip only, was expected to stay unchanged. So going the right way, but it's sticky, you know, the same old sticky lines that we're using. The claimant count in Feb, just under 17,000, so just a less than expected 20,000. The 3-month rolling employment change was a little bit softer, down 21k. Again, it's January, so there may be a bit of washout going on, seasonal washout from holiday hiring over the Christmas period and whatnot. The unemployment rate did tick up to 3.9%, but a bit like over in the US, that's still a good number. And unemployment 3.9% still a very good number. So overall, similar to the US jobs market in reaction, particularly in the pound. Pound a little bit softer this morning. You know, it's not gangbusters jobs report, but it's not a bad jobs report either. It could be a lot worse, and often has been as well. After that, the traders again went pretty much the same way as they have for the Fed. They now see more BOE cuts, or larger BOE cuts this year coming in. They see now 75 basis points of cuts by year end. We had a few banks also putting out their forecasts as well. UBS, they've gone the other way. They've changed their forecast for the first rate cut from the BOE from May, pushed it out to August. Morgan Stanley have been in the May camp for quite some time. They're pushing that case and saying that a May cut is seriously underpriced. So in effect, as Mark and others in our chat room noted, they are saying that the BOE is going to cut before the Fed and the ECB, which I think is completely bonkers, as to many in our room. There's no evidence to suggest at the moment that the Bank of England will cut before those guys. It's probably a long shot that they actually cut in June. I don't think it will happen unless we really see inflation and the rest of the data cratering. And I don't expect that to really happen. You never say never, but I think the BOE may be one of the last to get on their cut bike, as opposed to the others. Kay, what are your thoughts on that data from the UK this morning?
Yeah. I think the market may be a bit long sterling, a bit of managing the books. But if you see those wages above 6%, or thereabout on the average ex bonus, there's nothing there to signal that the Bank of England should be starting to cut, right? Yeah, the prior report has been also revised slightly, and you've got that unemployment rate tick up. But as you say, it's the same as what happened in the US. I understand the people screwing back on perhaps a few positions also with the upcoming data. We have another slew of data in the UK tomorrow, right? We do have the industrial production, and then January GDP and things. So perhaps the market a bit cautious and ahead of that US CPI as well. But I don't think it materially changes much for the sterling right now.
No, exactly that. Probably just a little bit of wandering, giving traders probably finding something to trade rather than actually really needing to trade it. But that's life in this game. It's pretty much been a day yesterday of polls expectations for central banks. A Fed poll by Reuters sees 72 out of 108 economists backing a Fed cut in June. So the market, as we've been noting in the last couple of weeks, coming more in line with what the Fed have been telling us, but they see June as the first cut period. 52 of those 108, so just under half, see rate cuts of 75 basis points or less in 2024. 26 of those 108 see rate cuts of 100 basis points or less in this year. 38 out of 44 economists, a big majority, say that there's a bigger risk that the March dot plot shows fewer rate cuts. So that would be a bit of a hawkish turn. And we have heard from some of the Fed heads, particularly Mester, about how she may change her or raise her long running dots. That's the column that is at the end of all the annual forecast that they make. So there'll be 24, 25, 26, and then the longer run rate plot. Mester was out, sorry, BOE's man was out as well, saying that there's a long way to go for inflation pressures to be consistent with the inflation target, and that the BOE's forecast on service inflation looks aggressive. Back over to the US, and JP Morgan CEO Jamie Dimon said that the US economy is doing fine and it's almost a kind of boom now. He sees a little bit of a bubble in equity markets right now, and says that if rates don't go up and there's no recession, most banks will muddle through the issues. So bit of a veiled comment there that if rates do go higher, then it's going to create potentially more problems, and that's going to be related a lot to the commercial real estate stuff going on. Another bit of a tailwind for Bitcoin yesterday from the UK. UK F.A.C.E regulator is apparently going to allow crypto-related exchange-traded notes. These are basically securities, debt securities that track the underlying instrument, in this case Bitcoin. And the reason they'll take that route rather than a sort of ETF route, more so, is that notes are already, they have to be run through either exchanges or depositories where these trades all get registered. So that gets the regulatory oversight, if you like. But yeah, another little, as I say, tailwind for Bitcoin there. Okay, got any other items?
No, I think that's okay, mate. There's not been a lot being said. I must say that Diamond, his comments that he gave over the past like half year, a year or so, they've been relatively close to what is happening in the market. So he is one. Obviously, he's the CEO of JP Morgan, but he's one that I like to listen to when he says stuff.
Yeah. Hopefully,
But for the rest, no.
Some of the others.
But yesterday we also had like the inflation expectations out. Medium term, they remain sticky in the US. Okay, New York Fed came out with the inflation expectations. So short term remained unchanged, but the medium term ticked up a tick, like the 3-year and the 5-year horizon as well. So that still remains sticky.
Yeah, thank you very much, mate. Right, so let's see, have a quick look what's been going on in markets, and those you read the comments and just a bit of sentiment coming in reality maybe. Also, maybe a few people are a bit short yen pairs at the moment, so we saw a bit of a rally back into 147. This 146.50 is a bit of a level now, as defined by the price action down here. Got a bit of resistance, this sort of area that we got up to, 55, 60s, 70s, call it, which is a former support point where we broke under. So that's where we're running into trouble on the top side. I'm still only looking at a real wide view of this one if I'm going to be looking to trade it. I may think about getting into a bit of a CPI short if we get a decent rally, hot numbers from the US, and we see this one higher. Because I think as much as the market's probably traded a good chunk of what's coming from the Bank of Japan, I think rally selling is going to be seen here. So we still need that confirmation. So if we get to a juicy rally in this one, I'm going to be a bit tempted to maybe get into couple of little shorts just to see what goes on. Obviously, big day tomorrow and Friday with the wages stuff from Japan. But for now, we're going to switch from the yen side of things to the dollar side of things as we go into the US day. So that one, yeah, just going to, even though this looks like strong support, if there's big headlines out of Japan, hawkish headlines, it's going to stand up to nothing. So, if you are leaning on these sorts of levels, look to keep your trades fairly tight, maybe a bit less risk than usual. We've still got high volatility, so a big headline and it's going to carve through. Same on the upside. So just be a bit wary. Know the conditions. Know the waters you're swimming in. Kay mentioned the pound. Yeah, coming off a bit. Would have liked to have seen it hold this 128 area. That keeps the rally maintained. When you start breaking down through the levels, that's never a good sign. 128, not a massive level on its own. We had these prior highs, which are probably more important, 75.80s, and that's where we are holding up for now. But it's just looking like at the moment we're holding below 128. So as you can see there, we've broken back down, and now we're just maybe going to start holding below it. So this is your first indication of whether we may be done with the top side. But again, US data later, we could be back up and testing 129 just as much as we could be testing 127. You just don't know in these times at the moment. Euro sterling also is continuing its push off from the 85 handle. Again, just shows you how big this level is down here. But as much as I like this level, as much as I like trading it off it at the moment, I am conscious that the bounces are very limited. And that's a worry because it keeps the pressure on this big level down here. So even though we've had this bounce from another test, I'm getting a bit more conscious that maybe think about sticking in some sell stops just below my zone here, because the longer it holds, the more it holds, the bigger the stops build below, the more volatile a break is if one happens. So I'm going to be thinking, about getting some sell stops in here to turn short if that breaks. But in the meanwhile, I'm still long, happy to sit in it, but I would like a bit of more of a bounce up to 86s perhaps. But this one's an absolute snail, as we know, so could be sitting here a while waiting for this one. Kay, what are your thoughts on the quick German? Anything going on in the crosses? Do you want to have a look at or something? Bang it over.
Oh yeah, I can have a look at some stuff if you like quickly.
Yeah. All yours, mate.
Yeah, there's one that I'm going to keep a particular eye on. Well, actually, those two antipodians, they have come back to their support levels. They trade not too far from their support levels. The Kiwi around this 61.45, 65 zone. We are on it. That could be an interesting one for this afternoon. This zone here. If we get a weaker CPI, we could start to move up again. But we are really data dependent. And then have a look at what's happening on this Aussie. We are trading that 66, the figure I think is going to determining for the afternoon on those US data, and it's going to be, in my opinion, relatively simple whether we are below or above. Below, we are likely that there's a bit of more here, but we are likely going to see a retest of the support zone here if the numbers are sticky or even higher. If January was a bit of a seasonal exception, it could be that we are trading the afternoon back around those highs here, where the top of the daily cloud lies. I'm not going to say that I think CPI should come in weaker or will be weaker, but this is one that I would rather catch a knife in than start to counter trade rallies. That I'm more inclined to perhaps be a bit long of it in some way. I may actually buy a little here now and then just have a contained risk just below there, just to see what happens over the data. For the rest, this euro dollar is also relatively simple for the closest. It's 109.15.17, that prior level, and the 50% there of the the year. Get down below. I think there's a chance we revisit 65.75 on 108. Get a week of data, we probably push back into that high here around 109.75. If it's really low, then probably we move into the 110s. Yeah, and that's about it. Cable small engaged, but my big zone is really I know people say 127.60, and that is possible. You know, if it goes back below 127.60, we could see a retest here of that 127 figure 20, but that's going to be my magic zone. And if we get back above 128, 128.25, then I think we push through. And with that, Ryan, back over to you. We're going to talk a lot more about all of this on the F.A.C.E show, as you said.
Yeah, thank you very much, mate. Yeah, we'll call it an early one today, folks. Yeah, we don't want to repeat ourselves here and then say it all again in half hour's time. So, yeah, that's got you through the headlines and a little look at what's happening with the BOJ in the UK and a couple of charts there. But we'll cover more a bit later on F.A.C.E. Do join us there. Thank you very much for coming to us today. Thanks, Kay, for your valued input, and we'll see you a little bit later.
Cheers all.